Good morning, folks, and welcome back to Almus Market Mornings. The focus this weekend was on the negotiations between US and Iran and on any potential peace deal. What we have instead is US blocking the Strait of Hormuz for any ship originating or entering Iran's port starting today in 10 a.m. New York time. This, of course, has resulted in a risk aversion today morning. Energy prices once again are moving higher. Oil prices broadly 7 to 8% higher, and there is a big spike of almost 15 to 16% in European gas prices. Good morning, JK. Over the past week, we saw recovery in risk assets, and now that the peace deal has failed, do you think we would once again be at an all asset sell off narrative, which we saw a few weeks back as the war started?
Good morning, Swaraj. What a volatile time we are living through right now. Just a week back, we were at the height of the tension with 48-hour deadline looming before US was going to destroy all the infrastructure in the Iran, and then sudden announcement of 15-day ceasefire to be followed by a face-to-face meeting with US and Iran in Pakistan. And then over the weekend, clearly the talks seem to have failed. And the US Vice President said that they are returning without achieving any success. He also said that Iran is the bigger loser from the talks failing, etc. So now, if that was the outcome, one thought that could be further discussion, but then the tweet from the Trump said that US military will blockade all the maritime traffic entering or exiting Iranian ports on Monday at 10 a.m. ET. Added that the US will not impede vessels transiting from non-Iranian ports. So basically, what they would be trying to do is stop the import or export for Iran. And he even told that even the NATO allies, whom he has been criticizing for not backing him in the war, wanted to help in the operation. But definitely, this is not helping matters because Iran responded by warning that military vessels approaching the strait will be considered as a ceasefire breach and will be dealt with harshly and decisively. I mean, Iranian officials also said that the threats by US will not have no effect on Iran, and they would fight back. So, I mean, I would say that we are back to square one, where we started last week, and markets are again under stress, and so that's not surprising that oil has gone up and the stocks are getting sold. Except that surprisingly, even Trump also posted that he believed Iran would continue to negotiate and call the discussions very friendly. So it's kind of markets. I mean, reasonably, there is reason to believe that two countries have to eventually get into some sort of a meeting ground and arrive at a lasting peace solution. But then the road to that is not smooth, and that is what has been proved time and again. So we hope things don't re-escalate to a great extent and to the detriment of the world in general. So that's what. Yes. Meanwhile, a lot of focus on inflation. US CPI showed prices increasing 0.9% month on month in March, as expected by the market, with a 21.2% jump in gasoline prices, of course, influencing. Now, well, that is quite expected because gasoline prices had touched $4 per gallon. However, the core CPI inflation was like somewhat softer than feared, rising only 0.2% month on month and 2.6% year on year, where versus 0.3 and 2.7%. Now, other than gasoline prices, there has been drop in the used car and rentals. These have helped the matter. So, but in any case, uh, you know, we already said that the US growth was lower than expected, and inflation is not going away. Whether it can remain transitory is something that we have to assess. But people do believe that this time, unlike in 21, 22, it may remain transitory because now there is a global pressure to end the war and to open the Strait of Hormuz. So the supply chain shock this time could be smaller, but then until it is finally ended, the uncertainty will remain. Therefore, while Fed will remain on watch and perhaps could get a bit hawkish, it's difficult to see them getting into a rate hike scenario immediately. Although individual Fed members have become quite, cautious also. Further dampening the spirits was the Michigan consumer sentiment, which plunged to all-time low in April, and it came at 47.6 versus 53.3 in March. And year on year, it was at minus 8.8%. So that drop of minus 8.8%. So this is again taking a toll because of the war in Iran, and consumers are quite downbeat on the prospects going forward. On inflation, the expectation is that it will be higher, both on the short term as well as in the long term. And then the war eventually, which is closely following the tariff issue, is keeping the sentiment extremely lower as well. So market reactions have been quite, quite on the expected lines. Asian markets are down, US futures are down. Oil, as I said earlier, has been down. Gold is back near 4,700. And, the yields are also a bit higher. But then once again, we are back to keeping an ear to what the news around is. And so any relief or again a restart of the negotiations could be a big relief to the markets. But then, as I said earlier, the path to peace is not going to be very smooth, and it is going to take some time. Even Trump himself has tweeted that the higher gasoline prices are going to stay for quite some time. So that he has prepared the US population in that respect. Now, on the domestic market, Rupee, after the deadline ended, or rather the deadline has ended on April 10, and today is the first day after the deadline for banks to unwind their long positions. Significantly, while the market talked about 30 to 40 billion of excess long position, Rupee strengthened just over 2% only. If you consider 94.80 as the level, 94.50.80 as the level where the announcement came, we ended at 92.70 or so on Friday. Not much of a gain despite such a large position, which means that the demand side in the market has been quite large, and the position unwind has not created a big dent on the USD INR. And now with the overnight news, we should be back above 93 in the USD INR. No doubt 93.80 will offer good resistance. RBI will, of course, I think RBI would have absorbed a lot of these sales by the banks, and they could use them in intervention as and when the rupee tries to break 94. On the downside, 92 has now become a very strong wall to surmount for the rupee. This can happen only with really sustainable good news. So we are back to a slightly weaker rupee. We also need to watch out whether RBI or government come out with some sort of additional administrative measures for reining in the USD INR. And on the FI front, last week again it was a big outflow for the rupee, or rather for the FI flows. But what was observed was in the last 3 days of the week, while we had a big negative of over 4 billion, for the week, in the last 2 days, we had seen the FIF outflow quite, on the lower side, and there was a small inflow as well on Friday. So that is something that we'll track, and whether it is a flash in the pan or whether with the valuations now at quite a low level, FIs are coming back with their investments. That is something that we'll be looking at for Indian markets. So overall, of course, we have the Indian inflation number tonight, which is expected to be obviously higher. Headline number is going to be higher. And RBI in their meeting also projected a higher inflation for FY27. starting from quarter 1. But how higher it will be will perhaps deal with the sentiment of the market, particularly on the bond market and also on expectations about RBI's next move. But going by what the governor has stated in his speech as well as in the press conference, RBI will be restrained in their reaction. Perhaps same approach like a Fed. These oil related inflation spike could perhaps be transient, and therefore any knee-jerk reaction to it by policymakers may be not warranted immediately, although they will remain on guard. Thank you.
Thank you, JK. And yeah, so I think this peace deal feeling, that again brings things to square one. Markets are once again under stress. And looking at the state, even today morning, Asian equities are down, US futures are down, yields slightly higher, gold trading around 4,700. So I think if I could sum up, it would be part with peace is going to take some time, as JK rightly mentioned. Uh, on the domestic front, once again, we are back to the weaker rupee narrative. The directive which RBI had set out ended on April 10th. The deadline was April 10th to unwind positions. All of that is now done. And as JK interestingly mentioned, the fall in the dollar was only 2% against the rupee. Now we seem to be back above rupees 93 and may have that weaker rupee bias. FIS last week had a big offer of $4 billion. That's something to look out for. And if this sort of trend is reversing, is something we will be observing. Indian inflation expected tonight. Likely it's likely to be a higher trend. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.